But before we get into it, there's a couple of things that I want to explain that you're going to see in the live video that may not make sense if we don't understand the context of this setup. So pulling up the Discord here, I'm going to post my pre-market plan. I post these every single day of the setups that I'm watching and levels that I'm looking out for. And the main thing that I was watching for today on June 13th was 54.16 to 54.10 on the S&P 500, which is represented by this green box. Now, I also hosted a live session the day prior, and in that live session, we were same thing, watching the same level, as it was a level of interest that formed based off of the CPI data on June 12th. So you're going to see throughout this video, 54.16, which is this green level, comes up a lot in my scenarios. Where this came from, pulling up the data from June 12th off the CPI data, is we can see the really large gap up off of the CPI data. Now we have to understand what's going on behind the scenes from this gap up and what is the volume looking like. So pulling up a volume profile. Here at 8:30 Eastern Time, we can see the very large gap up. And if you were to look to the right of the screen, you would see zero volume being transacted here, starting at 53.16.75. So directly above that, we see a lot of volume. In fact, significant volume of a negative delta of about 1,500 contracts. Now, directly below that, starting at 54.16.75, there is zero volume traded here all the way down until 53.95, which is where the market was trading at prior to CPI data. So usually, and contextually from a market's auction, levels that have no volume transacted at are considered unfair, and it's likely at some point in the future, whether it's intraday or a few sessions after, these levels with zero volume transacted there tend to get tested or tend to act as a magnetic force to the market where it normally gravitates towards. Also, they could act as support if above or resistance if below. So you're going to see 54.16 come up a lot in the live session, and you're also going to see 54.26, which I highlighted as this blue line. Now 54.26 is going to be my target for the live trade that I took, and that's for a couple of reasons, because the number keeps popping up. When I see a level or a price point keep popping up off of multiple different confluences, then it's something that I have to carefully watch. The first one is yesterday's close. The settlement on the S&P 500 at 4 o'clock Eastern Time was directly at 54.26. That's point number one. Point number two is that it is the overnight low. So we have the previous day close, we have the overnight low, and then zooming in, 54.26 once acted as support and then acted as resistance perfectly. In this live video, this 54.26 was my target. And also you're going to hear me talk about being very patient when the market is consolidating in this little range right here. When the market zigzags like this and it's consolidating and it's up and down, that means buyers and sellers are fighting it out. And our job as a trader is to not fight it out for the market. It's instead to trade once one side wins. Now, what I've found to work out the best when the market is like this consolidating, I like one side to be taken out. What I mean by that is I'd rather let the low of day break or the high break in this case for one side to become trapped, and then I can look to capitalize on the one side that is trapped. We're going to get into the live video. You're going to see how I entered, where I entered, my risk, and everything. But I do want to just highlight this point here that how I trade this way and the strategy that I use enables me to have very good risk to reward ratios. Now, I traded with 20 full-size ES contracts. For some people, that may not be a lot. For some people, that may be ridiculous size, right? But what's more important here is understanding my risk, because everything comes down to risk compared to how much you're going to make if you are correct. On this setup, my risk was super tight that I was able to risk about 2 points on this, which would have enabled me to have a $2,000 loss if I am incorrect on the setup. Now, if I sold my full position at my target, it would have enabled me to have an $8,500 profit. I came out with slightly under $8,000 because I held runners. So the risk to reward is the most important thing with every trade. And you're going to hear me talk about this in the live session here about entries are so important because if you enter correctly and you enter where your risk is super small and your reward is very high, it's going to enable you to be wrong more often than you are correct. And it's going to enable you to be very creative and flexible when you're in the trade. I had about a 4-to-1 risk to reward ratio on this setup. And that is a very good risk to reward. So without further ado, let's get right into this live session. It's just zigzagging, up, down, up, down. Every time it moves up, it looks like it's going to break out. Every time it moves down, it looks like that move has failed. So I don't like trading this consolidation. I'd rather wait for one side to break first. Add on top of this, the 26s are resisting price once we're under it, which is the overnight low, and it's combined with yesterday's close. So I would be a little careful in this range right here. At one moment, it looks really bullish, and then the next moment, it's been failing. So I don't want to get caught inside of this range. I'd rather wait for it to break, hit my 16 level, maybe a low of daybreak that fails. So something that I'm watching. Essentially, you have buyers and sellers fighting it out in this range, and there's no reason to fight it out for them. The minute it looks bullish, it fails, and the minute it looks bearish, it gets bought up. So wait for one side to win the battle. And that may be in the sense of it breaks under the low of day into the 16s, which then bounces. And then maybe that bullish plan that I'm watching will be validated. But I don't know. You see how I'm coming up with potential scenarios throughout the day? Like earlier in the session on that sell-off, there was like 3 or 4 times that I was watching for a long if something could become validated. Now, my analysis never got validated, which is why I never actually clicked the buy button on the setup. It's all about if-then statements. If this happens and this holds, let's say, then I'm interested in taking a trade off of it. I'm trying this thing long at the 17s here. It's going to either work out right away or it's not going to work out. I'm going to put my stop loss under the 15.5s. It's a small little risk on this trade, but I'm liking the lower day sweep. I'm liking the reclaim back into this range. I'm taking a stab at the 17s. I'm first going to target the highs of the consolidation range at 1030 at the 26s. Above the 26s, I'll target the 30s and the 39s. So small 2-point risk on this for potential 9-10 point reward to the first target. I just like a low of daybreak that reclaims back into the range. And then above the 26s is the first target. 26s has rejected the market around the 1040-ish mark. And that also aligns with the overnight low and yesterday's close. So a significant level with multiple tests acting as resistance. So that would be my first target on this setup. A strong breakout above that may validate a valid reversal at the lows. Just when I see a market break a low and then reclaim back into the range, I have to take a stab at it. You know, I can't sit here and not take a stab at it. Broke under the low, reclaim back into that consolidation range, and keep in mind it's at a level of interest. It's right at 54.16. So here's a strong push up about 6 points on this position so far, 3-to-1 risk on it already. Not the biggest fan of that rejection right there. Don't like that a whole lot. The market really should not revisit this level, which it is. Yeah, ideally, the market should have went to go test those 26s on that low of day bounce. So for us to now, be up from the low of day about 10 points and then for us to come back down into this low is not ideal. However, we are still holding the level, which is why I have to maintain in the trade. Well, the market should not have revisited down at these levels after a 10-point bounce from the low of day. What that indicates is that those buyers that I was reading at the low are not very strong for the market to, within 10 minutes, come revisit that low again. If you're long in the 24s, then absolutely it's a stressful trade. But that's why you always got to put an emphasis on your entries. My entry's at the 17s. So even though we just pulled back 8 points from that, I'm technically still green 2 points on this position. So entries are everything. If I got an entry at the 22s or 24s, that pullback would have definitely stopped me out. But because of how well my entry was at the 17s, I could afford to get a little creative and flexible with the trade. And also now that I look at it on the current or the previous 5-point range bar on ES, at the low at 54.17, there was a negative 606 delta there. So they were really trying to bring the market lower, and this kind of just adds fuel to the fire if this thing does rally. Because there was a lot of trades hitting the bid at the low, And, that's a recipe to not be good if this thing, big if this thing could get above the 26s. Depending on this break, I'm either going to sell 50 or 75%, depending how strong this break is at the 26s. If it's a weak break, I'm going to sell 75%. If it's a strong break, I'm going to sell 50%. 26 and 3/4, out 75%. We'll hold the remainder contract. Stop's going to be placed at the 20s. So guaranteed 2.5 points on the remainder 25%. Really now just going for the strong break above these 26s into the 30s and then the 39s. Yeah. Out the remainder 25% at 54.20 and 3/4. So 3-point gain on the 25% runners on that. Solid trade. A little under 8K profit. Over 5-to-1 R multiple on the first 75% scale. Tomorrow, hopefully you got some value out of this live in terms of patience, in terms of executing, in terms of risk, in terms of understanding the context. Hopefully you all did, but peace out.